I want to illustrate how you're losing money by saving it in a safe, in cash, or in a bank deposit that doesn't earn you any interest. So I want to take an example of 50,000 Kenya shillings. If you have today 50,000 Kenya shillings.
Welcome to Study of Wealth, and big up for taking the first step in
a journey towards your financial freedom and a journey towards securing your future. In a world where money talks, you are learning to speak its language fluently. And my mantra is always to just start. It's never too late, it's never too little, it's never too early to start. Start where you are right now. And today we have a lot of opportunities when it comes to investing and saving money the right way. We have a lot of opportunities that you can start from where you are with as little as you have or as much as you have. Yes. And this video, I want us to cover money market funds. And in money market funds, by the end of this video, you're going to understand what money market funds are, the risk, the benefits, what are some examples of money market funds in Kenya. I've been in this space for a while now, and I've seen one or two, three things that I would like to share with you, and I would like you to learn from what I have experienced. And yeah, this is where we start. This is where we start our journey of investing. And with that, without much further ado, I would like to just jump in. So I'll start with what we know, savings versus investing, the difference. So savings is like putting your money in a safe. It doesn't do much in that safe or when you have it in cash, but it's always there when you need it. Yes, while investing is like planting a seed. It will take time to grow, but eventually you're going to start seeing the fruits of whatever you planted. Yes, and the money will start working for you. So that is the difference. And now that brings us to money market funds, because money market funds is a way for you to start investing. And before we go to what money market funds is, I want to illustrate how you're losing money by saving it in a safe, in cash, or in a bank deposit that doesn't earn you any interest. So I want to take an example of 50,000 Kenya shillings. If you have today 50,000 Kenya shillings, and then you go to a supermarket, you buy things worth 50,000 Kenya shillings, and then a year later, you go back to the same supermarket with the same amount of money, 50,000 Kenya shillings. You want to buy the things that you bought a year earlier, you'll be short 3,350 with the current inflation rate of 6.7%.
I want that to sink in, and I will repeat. If today you had 50,000 Kenya shillings, you went to a supermarket, bought things worth 50,000 Kenya shillings. A year later, you go back to the same supermarket to buy the same amount of things. You will need an extra 3,350, and the value of your money at that particular time will be 46,650. And 2 years later, your money will be 43,300. Now you can see how your money loses value over time, and you can imagine what will happen 3, 4, 5 years to come, or even 30 years, because I know there are people who put their money for longer periods. So let's take this a notch higher. Let's look at 100,000 Kenya shillings. If you had this money in a bank, or if you took this money, went to a supermarket, bought 100,000 worth of goods, a year later, you go back to the same supermarket to buy the same amount of goods, you will need an extra 6,700. And this I have calculated using the current inflation rate, which is 6.7%. Your 100,000 Kenya shillings will be worth 93,300 a year later. In 2 years, it will be 86,600. And you can imagine what will happen 3, 4, 5 years to come. And you can see in this table, we have also calculated for 500,000 and also 1 million. So this is the amount of money you're losing just because you have your money in cash, or you have your money in a deposit account, a current deposit account in a bank where it's not earning any interest. And this is the reason why I'm talking about money market funds, because it's going to hedge you from this. It's going to prevent you from losing value from your money. Your money might look the same at that particular time, but trust me, the value will be different. And this is the sole reason why you need a money market fund.
And I usually say, if the interest rate of the money market fund that you're in is above 6.7%, then that would cover it. That would cover the inflation rate, and your 50,000 Kenya shillings today will be the same as 50,000 Kenya shillings a year later. So that's what we are talking about. The topic, money market funds. What are money market funds? So money market funds are a type of mutual funds that invest in short-term, safe, low risk securities such as government securities, certificates, and deposit and commercial paper for corporations. They are designed to offer investors high liquidity with a very low risk level of risk, providing returns generally better than traditional savings account. And how do money market funds work? So this is how they work. Fund managers, these are companies in Kenya authorized by Capital Market Authority to do this. So they manage funds, and what they do, they collect money from different investors, and then after accumulating that money, they go to, or they negotiate good deals, the investment deals, and they invest that money for you. So it's like joining hands. You and your neighbors, you join hands, you contribute some money, and then go to buy things in wholesale, and then you get better deals. So the investment deals, and they invest that money for you. This is what fund managers do. They collect money from different people, they pull that money together, and then they go to companies, to corporations, and they negotiate good deals for you so that you can get very good returns on your investment. Yes. So you would find money market funds offering 18% interest rate per annum, others 15%, others 9%. I think the lowest that we have are 9%, and that is per year. And this is what you get if you put your money with them, you invest with them. And I have heard people say that money market funds is not an investment, but anything that is above 6.7% interest rate, that would be an investment for me because it is earning you some extra cash. Yes. So sometimes I say it's a nice way for you to start investing, because especially for people who have low risk tolerance, or they have low risk tolerance. They don't want to risk their money too much. They don't want to get into investments that are too much. Yes, they want to invest in very low risk investment, and this is a very nice way because you don't even you're not involved in deciding which instruments to buy. You're not involved in making decisions on when to sell, when to buy, which one to negotiating about good deals. These fund managers do all this for you, and then they give you the interest of your of whatever you have invested with them. But, these people who are managing your funds are professionals, and they know how even to diversify. They buy different instrument securities, or they buy different investment securities, and that means that your investment is very safe. You're not likely to lose your capital or whatever you invested. They assure you, or they guarantee capital reservation. And yeah, that is a very good thing when it comes to investments. So you can use money market funds as a parking before you get the right opportunity to invest in a different investment or investment opportunity, because most of the time this investment opportunity requires a lot of money. Like I know, if you want to invest in government bonds, the minimum amount, like an infrastructure bond, the minimum amount you would invest is 100,000 Kenya shillings. And most of us, getting or accumulating that 100,000 Kenya shillings is requires some work. But if you're putting that money in a money market fund now before the beginning of the year, which is usually when those bonds are floated, you'll have enough money to even go to that route if you need a higher interest rate of an investment. Yes. Now we have covered what is money market funds and why money market funds. Let's go to key benefits of money market funds. And number one is liquidity. You can access your cash anytime you want. Most of these companies, they do 2 to 3 working days, while others you can withdraw your money instantly. So that is the decision for you to make, which one you would work well for you. The other key benefit is low risk, and as we have mentioned in our definition of money market funds are considered low risk investment in the spectrum of investments. They are slow and steady. You won't get rich overnight, but you are less likely to lose your money. Yes. And then the other key benefit is diversification. Your money is spread across various instruments. If one investment hiccups, The others can pick up the slack. And then we have professional management. You have expert handling these investments. Experts have covered that for you. The other key benefit is potential for higher return, better rates than standard saving accounts, and it beats inflation. So it's a nice way for you to save your money. Yes. Another very key component in money market funds, and this is something that is very close to my heart, called compound interest. Yes. And this is whereby the interest rate you are earning is not just from whatever you invested, but also from the interest that you have earned in the previous day or in the previous months. And there are companies that do daily compounding, others do monthly compounding, and they credit your account. There are some that credit your account daily, others credit your account monthly, and then they calculate the interest rate for the next month or for the next day using your initial capital plus the investment from the previous day or whatever time you have been there. They calculate your interest using that. So over time, your money grows, not through the interest alone, but also through the compound interest. Yes. And I'm going to give you here, we have an illustration of what an account with 50,000 Kenya shillings. If you're not topping it up and we are assuming that you are receiving the same interest rate over a period of years, what you're going to get, you can see in the first year we have if you deposit 50,000 Kenya shillings, and by the end of the first year you're going to have 58,000 Kenya shillings. Then in the second, after 5 years, you are going to have 121,000 Kenya shillings. After 10 years, you're going to have 293,000 Kenya shillings, and after that years, you'll have 4 million. You can see we are the ones limiting ourselves, but in such an account, you can grow your money over time. Put this money away to be working for you. You can see what it can do to your money. So this growth happened because each year you are earning interest on a larger amount. It's like a snowball effect for your money. Every time it's correcting more money, and more money on your interest. Yes. Assuming we have the same interest rate and you're not topping up your account. So imagine what will happen if you're topping up your account. Let's talk about choosing the right money market fund. And when selecting a money market fund, you need to consider these things. Number one is the yield. Look at the fund historical returns, but remember, past performance does not necessarily guarantee future result, but it can tell you how that fund would look like. Yes. Lower fees means more of the returns to go to you, and by this I mean the money market fund manager usually cuts some fees, management fee, so you need to check how much they charge, so that you go for fund manager that have less fee, because it means more for you. Yes, but also don't let these hinder other things like the interest rates. You looking at interest rate or the reputation of a company because it's good for you peace. Okay, the minimum investment. Some funds have lower entry points, while others have a little bit higher entry points, so go for the ones that will work best for you. I have seen money market funds that you can start with 100 bob, others with 1,000, others with 2,500, others 5,000, others even 100,000, 500,000. So go for what work best for you. Then you have also minimum subsequent top-ups. These are the amount of money that you're required to, the minimum amount you're required to top up. I have seen some companies, they do even 100 bob. You can do even daily, monthly, or even yearly, whatever, whenever you have some cash. There are companies that do 100, others 1,000, and so on. So go for the company that will work best for you. If you're a kind of person that get 100 bob daily, you would want to go for that money market fund. If you get 1,000 at the end of the month, you can choose the one that supports that. Yeah. Then we have easy to access your funds. We have companies that do 2 to 3 working days, others it's immediately. What works best for you? Would you want your money, when you are withdrawing your money, would you want it to get it right away, or is 2 to 3 working days good for you? Would it give you some discipline? Because that works very well for me, because it gives me discipline, because I know I can't access that money right away, so I'm not even going to think about it. Yes. And also you should also look at the reviews. Things to check on the reviews. You can check the customer services, the withdrawal, app reliability, and this to navigate, and then the communication. So now let's go through a few. I'm not going to mention all of money market funds that are here in Kenya. I'm just going to list a few of them, and the minimum investment required, and then the required minimum initial investment. So I'm going to pin it here so that you can go through the list. You can pause the video so that you can check the list well and see the different money market funds. And the list is in no particular order. I just listed them, so it doesn't mean that the first one is the best. Yes, and the best depends on you. So risks to consider when it comes to money market fund. Returns are not guaranteed and can fluctuate. So we have said that fund managers, they invest in different instruments, and in as much as that it is safe and it's low risk, sometimes the interest rates can fluctuate. So in rare cases, funds can break the bank where the but this is unlikely where we have financial crisis, and that is if the whole country or we have a financial crisis, then the money market funds can be affected. And then sometimes if the inflation rate goes above the interest rate that is being offered by the fund managers, that can also affect your capital, or it can affect the value of your money. Those are a few risks that you need to consider, but I don't think they are so alarming. Not to, because if at all you also have that money in your bank, if we had a financial crisis in the country, it would affect that too. Yeah. And inflation rate, if we had inflation rate, it will also affect your money in the bank. So you also need to check the reputation of a company, because you need peace. You want to put your money where you're comfortable. I've seen some companies that had some issues before, but the thing is, money market funds are regulated by Capital Market Authority, and the company doesn't. So long as that company is licensed with Capital Market Authority, and you're safe to invest there. But I would advise for those people who have negative review, or they have some negative issues with the company, please don't invest there. You want to invest where you'll have peace of mind. Yeah, because I have had that before, where I invested in a company, then the company started having some issues and I was afraid. Yeah, but it affected other instruments or other funds in that organization, but it never affected money market funds. So money market funds are very safe. Yes. So how do you get started? Number one, you need to research, compare different funds using the factors that we have discussed above. Choose a fund, select the one that best fits your goals and risk tolerance. Then go ahead and open an account. This can usually be done online or at a fund manager's office. There are companies that requires you to go to that company. Like KCB, you have to go directly, while others like Etika and others, you just need to download the application. Others, you just need to call them. Like Britam, you just call them and then they are going to direct you on how to go about it. Yes, and I know most of these companies, because they're in business, they want to collect that money. They have their contact list in or their contact numbers in their website. So just go to their website and contact them. It's always good to speak to them before you even download those applications, because how will you know how their customer services are if you don't even call them? So it's usually nice. Just call them, let them explain to you, ask them questions, so that when you're getting into these money market funds, you know what you're getting yourself into. Yes. And in case you have an issue, you know who to call. So get those numbers from their website. They have listed those numbers there for that reason, for you to call them, for you to communicate with them in case you have an issue. You just tell them, yes? So and then make your initial investment. Start with an amount you are comfortable with. I usually say that don't invest what you can't afford to lose, but and in this case, I would advise that you do different money market funds. That's what I've done anyway, and it's called diversification. You can do two fund managers, yes, with two different interest rates. Then you can monitor and adjust later. Keep an eye on your investment and adjust when needed. Yeah. If you are not comfortable with one, you can always transfer it to another money market funds. Yeah. So let's talk about taxes and fees. So money market. So let's talk about taxes and fees. So money market. So let's talk about the funds are, or the interest that you earn is subject to withholding tax, and currently it's 15%. So keep that in mind, and this is charged on your interest, not on your capital, it's on your interest. So we have 15% withholding tax, and then we also have what we call management fee. Sometimes it's 2%, most of the times and most places it's 2% or lower. So that's what they will charge you for managing your fund. And I had a question in one of my platforms. Someone asked whether how they feel the returns for money market funds, and doesn't affect how you file your returns. Continue filing your returns as usual. Yes, if you don't have a salary and you have a money market fund, that is nil returns. Yeah, but make sure that you keep checking the KRA and their updates so that if that changes, you will know. So my final thoughts, money market funds can be an excellent tool for managing your short to medium term savings. They offer a balance of accessibility, potential returns, and relatively low risk. However, they're just one piece of well-rounded financial strategy. Consider how they fit into your overall financial goals and risk tolerance. Remember, investing always carries some level of risk. It's crucial to do your own research and due diligence. And by understanding these fundamentals, you are now better equipped to navigate the world of money market funds in Kenya. Here's is to making informed decision and growing your wealth. And remember to just start where you are. Don't wait for anything else. And I will post this question. So you ask yourself this question: what are you waiting for? What is holding you back? What is holding you back? And will you start investing? Will you? So with that, thank you so much for joining me. Give this video a thumbs up if you liked it. Remember to subscribe to my channel.